So today things are a little bit different. I'm going to trade this $83 account and try to raise it to a significant amount. So make sure that you watch the video to the end and make sure that you grasp every concept that I'm going to explain in this video so that you can actually use it in your own trading too, right? So make sure that you subscribe to this channel so that you don't miss on stuff like this, and join all my social media platforms so that you can get enough information for you to be able to trade on your own, right? So I suggest that if you are watching this video on TikTok, you subscribe to my YouTube channel so that all the links that I put will be clickable. Since links on TikTok cannot be clickable, sometimes you might lose information and sometimes you might miss out on giveaways. So make sure that you click the link and join my YouTube channel so that you won't miss on any important update that I'm going to post. So without wasting much of your time, let's jump right into it. Okay, so my brother is more of a scalper, right? So he told me to look at the chart, volatility 50 index. So I looked it up and then I draw the lines of confluence in this chart. So this is what I'm going to do. I'm going to mark the resistance at the top, and then I will mark all other areas of confluence that are important, right? But considering this trade, my brother is a scalper, so I identified two levels that is touching the resistance at the top, right? And then those two levels are actually marking something like a double top, right? And then at the bottom there was a lower low, right, like I'm marking right now. And then the lines at the top are the higher highs, right? So after I identified these two levels, I then identified another area of confluence that is the support that was once broken to become the resistance and then later broken again to become the support again, right? So this is just an order block. This is where the price will visit to collect the liquidity, right? So we are saying at this point I'm going to move to the lower time frame so that I can confirm the same trade that my brother identified, because he is a scalper, right? So he's just someone who looks at the chart in the 5-minute time frame and also even in the 1-minute time frame, because he just likes to scalp and it actually works for him. So this today I'm going to work more with his strategy and see if it can actually work. But then that doesn't necessarily mean that I don't have to consider my own analysis that I'm used to so that I can confirm if it's in conjunction with his. So right now I'm drawing a rising wedge that was respected for quite a number of times, right? So we can see that the market was moving in an impulsive move and then a retracement, an impulsive move until the point where it created the higher high, and then at the bottom there is a lower low, right? So we know that once the market starts to move in this direction, it will be creating areas of support, resistance that will be broken to become the resistance, right? So it will be creating higher highs and higher lows, right? So these will be points of support and points of resistance as the market continues to break the structures going upwards, right? So we are saying at this point the market is doing a break of structure at this point. Let me label it so that you can clearly see. This is known as the break of structure, a point where the market surpasses the previous high or the previous low if it's in a downtrend, of course, making a new high, right? So once it makes a new high, that's when we clearly identifies that the market had a break of structure, right? So this upward movement is always considered to be still in play until there is a change of character, right? So you must always remember that since the market is continuing to do break of structures, it is still in an uptrend, right? So I'm just going to draw what I was illustrating so that you can clearly see. So right now you can see that this support line that I've just put was broken to the downside, right? So we all know that when the market breaks a rising wedge to the downside, it always comes back with a retest, right? So the retest had to touch the support that I've just put the shadow zone, and then it had to go back to retest that level. So at this point we can now clearly say the market is going to retest up to that support level and then continue going down, right, in this direction, right? It will be testing all the support levels or all the areas of confluence that will be considered our take profits. Of course, we can put as many take profits as possible because there is a lot of areas of confluence in this chart, right? So there will also be another one that will be the last take profit that will put at the very bottom. That will be the latest lower low, the lower low. Let me put a shadow zone so that you can see clearly the latest take profit. So if you are actually patient enough, you can actually hold this trade until it reaches that point. So at that point you collect as much profit as a lot of profit, right? Because this is actually an H4 trade. This is actually a very higher time frame trade. If you are patient enough, you can actually collect as much profit. So this is what I always teach you guys. You must always be patient enough to hold a trade for a day, 2 days, or 3, right? Sometimes it doesn't really mean that if you have a small account you can't hold. This is volatility 50. It doesn't really move that impulsively, right? Anyway, as you can see in the lower time frame, just to confirm what my brother suggested, there was an imbalance that was created, more like a fair value gap. So I couldn't say I can scalp at this point, so rather I just had to put a lot of positions as you can see, so that I will just see it after a very long time, right? So this is what I decided. I could have listened to my brother and tried to scalp, but then that's basically not how I do my things. Anyway, since we are waiting for this trade, I'm going to look for another trade elsewhere and use a different account to trade this volatility 25. So I'm going to look for a trade there. Okay, so now that I've gone to this volatility 25, it was also his idea for me to look at this chart. So this is what I identified. So this time I'm going to try his scalping techniques, because this is just a small account. It's $16. It's not that much. I'm just going to try to analyze it and enter the trade, right? So right now, as you can see, I've of course moved to my higher time frame so that I can start my analysis using the top down analysis, whereby I go from the higher time frame moving to the lower time frame, so that I can confirm the trade if it's going in my intended direction. And I've identified an area that was respected, that is the support at the top, the resistance at the top, and then there was another area of confluence that was respected, right? So this will be our order block. This will be our order block, right? So at this point, that's not enough for us to decide where the market is going. So moving on to the 5-minute time frame, I'm going to say to take the trade that my brother told me, and then I will explain it to you after I end up, because this is scalping. I might actually lose the exact time that I'm supposed to end. But anyway, I will always have enough time to explain it to you so that you clearly understand why I sold at this point, right? So what we're going to identify is a fair value gap first. That is the point where I've just put that order block, right? So this is always an area of imbalance, right? A fair value gap is always an area of imbalance. So the market is always supposed to go back to that area of imbalance to rebalance the price, and then it will continue going up, right? So we are saying at this point the market has one thing that is drawing it to have the BS powerful, right? So this is the order block that I've put. And then another thing that you need to consider is the the double top, right? So since the market is supposed to go to that order block, there's also another thing that you must consider, right? You must also consider that that double top. Anyway, the price will drop to the to that fair value gap so that it can rebalance the fair value gap, right? So it will have to drop to rebalance that point. Anyway, sometimes when people trade the fair value gap, they take the trade when it touches the fair value gap. Oh, that's actually the right thing to do. But then that doesn't necessarily mean that that's the only part that is played by the fair value gap, right? As you can see, I'm already in profit, and the market is going down, right? So the double top at the top, I'm pretty sure you can see it, where the market created a higher high, but then went back down to create a higher low, right? After it created a higher low, it went back up again to try to break to the upside to create a higher high, right? So when it failed to create the higher high, it then stopped at that point where it created a higher high, right? So meaning that the market created a double top since it failed to break at that point twice, right? At the top where I'm putting the shadow zone, that's a point where the market failed to to break to the upside. That is always the first always the first sign to show you that the bears are powerful. So because you know that the bulls failed to break that point not only once but twice, right? So after the market passes through that neckline, it is now supposed to go down, right? So we're just going to put the shadow zone, and then we can make our analysis from there. And then we also put another shadow zone that is marking the neckline. So once the market passes through that neckline, it will continue going down, at least to the fair value gap. It can actually pass through that fair value gap, but then it will go down, right? So as you can see, my take profit has already been hit, and this is a lot. This is actually a 5-minute trade. I'm using the 5-minute time frame, but then I collected much because I went a little bit full margin, because that's the best thing about scalping. In scalping, you must always know that when you have made your mind to anyway, it's time to close. When you've made your mind to enter a trade, you must always be prepared to take a full margin trade, because that's how you make profit. Of course, you can scalp bit by bit, but then of course I don't recommend that you go full margin. But once you have enough experience, you can actually risk 1 or 2 trades so that you can be as profitable, right? So I've closed the market. That's basically it. Back to V50, right? So this was my analysis. This was actually my brother's analysis that he made on his tablet. So basically, as you can see, the market is going down, right? The market is going down. So this is just a 5-minute trade. That's right. So that's order block. That's an order block that was created when the market created something like a left shoulder, right? This is not a head and shoulder pattern, but it's a point that is worth considering. Okay, so his analysis, as you can see, there are lines that are crossing. That's actually a pitchfork, a long-term pitchfork that he uses. He actually prefers using the pitchfork, and yeah, he is actually the one who taught me the pitchfork strategy. I'm going to explain it in one of my videos in the future so that you can understand. It's actually a very powerful tool, and it's actually great for scalpers. So if you're a scalper, you must always know that areas of the Fibonacci retracement and the pitchfork is actually more like the same thing. They always move in a similar sequence, right? So now we are going to go back to our trade and see if we made profit. And then this is me coming back to my account and seeing that the market actually went in my direction, but the account is zero. So I don't know. It's I don't know. It's just a little bit tiring. It's so exhausting to come back to a chart where you actually see that the market actually went in your direction, but then your account is blown. Anyway, that's what happened. I have a 46-cent account, and if I'm to hold this trade, if I'm to enter the trade again, I'll actually see that I will be in profit, because the market is still a very long way from the last take profit. So I can actually enter this again, but then I'm not gonna do that. So in summary, I didn't make any profit, because the profit that I made on the other trade was actually blown on the other account. So that's basically it. So let me know what you think in the comment section below. If you have any question, just drop it in the comment section. I'll be more than happy to answer it. So see you in the next video.